right, viewers? We have officially closed for trade, wrapping out yet another winning week on Wall Street. The S&P 500 ending just shy of a record high. For all of our viewers just tuning in, welcome to Taking Stock, live down here on the floor of the New York Stock Exchange. We got a lot to talk about today, so let's run through the major indices. The S&P 500, I mentioned, just fractionally lower. Had touched an intraday record earlier in the session, ending down by not even 0.1%. We did see the small caps underperform, down about 1%. That's the Russell 2000. That's on the back of some disappointing consumer sentiment. A preliminary read for the month of September showing that consumers expect inflation to rise and growth to slow. The NYSE Composite down about 0.7%. The Dow, for its part, down about 0.6%. Also, that data a factor dragging down the Dow today. So I do want to bring my first guest down here on the floor of the New York Stock Exchange, Jim Neeson. He's an IPO analyst and managing partner at Connor Group. Jim, you can join us. Great to have you here at the Stock Exchange today, and a lot to talk about. Yes. Let's start with the IPOs this week.
Absolutely. So, Kristen, this was one of the most anticipated IPO weeks in years, right? We had 5 big IPOs, really headlined both by Klarna and Via. And I think the themes that we saw is, number one, all oversubscribed, all of them trading above sort of their initial price, and there was just a lot of buzz. The retail investors, they were at the party, but they also had the VIP bands on. So a lot of things to be really excited about this week.
You mentioned one of the most anticipated weeks in years.
Yes.
What does that tell you about the state of the market?
You know, I think big IPOs are back, right? These are companies that have been sort of in the gym, and they've been working out for a while. The timing was ideal. You mentioned that the market's at all-time highs, right? You have an economy that's sort of really driving as well. Tariff dust is settled. But companies, they're really ready to not only go out and transact, but actually operate as public companies. A lot of excitement going into closeout 25 and into 26.
Okay, so let's talk about what is in the pipeline and what we can expect, Jim, through year end.
Yeah, so I think through year end, you're going to see a lot of companies. You'll still see those large cap companies. I think those are the ones that the bankers have been sort of looking at. I call those the cream of the crop, but I actually see a lot of other industries outside of the crypto, the AI, sort of the IT security space. You're going to have B2B, B2C, you're going to have health tech as well. And you're going to have other companies in broad industries that have been really preparing for 12 to 18 months. Now they're going to really be testing the waters in the market.
And of course, you mentioned the market at record highs. How does that factor into a company's decision to tap the markets?
You know, I think a lot of companies, you can't always time the market. So sometimes it's a little bit coincidental, but you want to have everything there, right? You want to be on file. You want to have sort of those discussions with the bankers, the institutional investors, and you want the retail investors to be really sort of engaged in this story. I think there's a lot of work that you can do ahead of time, but I think the market's really sort of, that's that harbinger into next year as we got a lot of wind going on. 3 Fed rate decreases coming up as well. I think it's going to really play well for the markets ahead.
That definitely is the expectation. Of course, Connor Group advising companies on their IPO journey. What are you hearing from clients now?
Yeah, I think for a lot of companies, it's let's make sure that we have that foundation in place. Let's make sure that we really understand our revenue, our earnings, and be able to sort of give estimates to the market that we can sort of beat and raise. That's a really big part of the story. Don't miss your first quarter, your second quarter, but this is a long-term journey. Make sure that you really can sort of go out into the markets and really sort of make your investors happy and make this for sort of that longer-term period.
What are the other trends that you're seeing right now, Jim, when it comes to IPOs?
You know, I think in terms of trends, I would say number one, it's a lot more broad-based in terms of the markets that are out there. I think also it's not going to just be large cap. You'll see a lot of mid-cap and small-cap companies. I think you'll start seeing some more biotech, right? We had a biotech go out this week. That was an amazing thing as well. I think also companies, they're not just looking to lean into private markets and get the runway through VC and private equity. Let's actually bring the story out into the public markets. We've had 243 IPOs this year, right? I think we're 85% of where we were at this exact time last year. Best IPO market in over 4 years. We're going to see that trend continue.
What can an IPO do for a company?
You know, the press is always about it's raising cash, right? It's sort of a currency that you can do M&A transactions, but it's really a branding event. It's a way to show your customers in the marketplace we're strong, right? We're really stable, but we're going to look to expand. We're going to sort of move into international markets as well. We are sort of the top, you know, the math is like 0.001% of companies that are actually founded ever go public. So you're in rarefied air when you do your IPO, but that signals strength to both your customers as well as your investors. investors.
Jim Neeson with the Connor Group. He's an IPO analyst and managing partner. Jim, thank you so much for joining.
Thank you, Kristen. Appreciate it.
Of course. All right, let's take a walk down here on the floor of the New York Stock Exchange. Jim was telling us all about the hot deals this week, and he is exactly right. We got a big crowd here. We're going to walk you over to the trading post and show you just exactly how well some of these stocks actually performed. We just got a little trickaroo here between the crowd. Hello, everyone. Welcome to the Stock Exchange. Our viewers, I'm going to tell you a bit more about VIA shares. Again, this offering hitting the capital markets today. The first trade bell actually right over there, my left-hand shoulder. That was about midday when the offering did officially open for trade at 2 p.m. Eastern. And I do want to take you over to the trading post here. Our cameraman Bobby is going to walk us through what we can see. This is a good day, beep, beep, for VIA. Let's zoom in on that stock. Again, this company tapping the capital markets today, listing at the New York Stock Exchange, held steady on its first day of trade, did officially book a gain on this session by about 7.5%. Price shares at $46 a piece last night, raised $493 million at a market value of $4.2 billion. You might know this company because it made the City Mapper a mobile navigation app and now does really focus on selling software. Great debut for VIA. Six Flags Entertainment up next. I like this one because it's a Friday afternoon and the ticker symbol is FUN, F-U-N. So let's have some fun. Let's take a look at the stock, talk about fun there. Up 7.77% on today's session. Reported attendance strengthened and strong demand for its 2026 season pass program. August attendance up 3% versus a year ago. Halloween and the holiday season, typically popular times for this amusement park chain. Pretty sweet stuff on a Friday. We will take it indeed. Well, earlier this week, I sat down with Tilak Mandati, EVP of Ventures and Chief Experience and Technology Officer at CVS, and here's what he had to say about innovation. CVS Health is putting innovation at the forefront. In fact, it's investing $20 billion over the next decade to improve the customer experience. Joining me now with more is Tilak Mandati. He's CVS Health Executive Vice President of Ventures and Chief Experience and Technology Officer. Tilak, welcome.
Thank you.
It's great to have you here at the Stock Exchange today.
Great to be here.
How is CVS Health reimagining the healthcare experience?
Experience is one part of it, Kristen. I think we are reimagining the entire healthcare, changing the experience from being sporadic and completely siloed to an integrated experience that's customer focused, expanding the access to healthcare to patients and consumers, giving full transparency to the cost of healthcare and the ability to manage the cost, and then making sure they get the right outcomes by picking the right doctor, right facility, and getting the advice that they need. So all those things are part of how we are transforming healthcare.
What does the data show about the link between customer experience and health outcome?
Good experience, good healthcare experience leads to people engaging in their health more. And engaging in their health more leads to better trust and behaviors. And it's clear from the data, when people engage in their health sooner than later, more frequently than not, they have much better outcomes, much better longevity and better health. So data is very clear about that. It all starts with the experience.
CVS Health has committed $20 billion over the next decade to improve the patient experience. How is it going to deploy that money?
When we looked at customer experience or patient experience, clearly how the patient engages with CVS Health and how they navigate the healthcare ecosystem, that's really important. Second, equally important, is eliminating the friction between the providers and the rest of the healthcare ecosystem. So the providers can provide better experience to the consumer or the patient. And third, as a company, just operating more efficiently and more agile. All those three things are important. And our $20 billion is going towards the experience, eliminating provider friction and being a more lean and agile company. We invest that money, or we intend to invest that money in two different ways. One is developing capabilities that go against the three I talked about. Also investing in the digital health ecosystem. So we have CVS Health Ventures, and we intend to invest a lot of money every year into the ventures ecosystem as well.
I want to hear more, Tilak, about how AI and digital innovation fit into the strategy at CVS Health.
Healthcare as an industry, I'm a relative outsider. I've been here in healthcare for 3 years. Healthcare as an industry has very successfully and consistently resisted change and transformation and technology over the past many decades. And so healthcare as an industry is well behind other industries like financial or entertainment in adopting technology and getting better because of it. AI, I think, is a truly once-in-a-generation phenomenon for healthcare. It reminds me of, third world was not well connected when it is wired telecom, right? Copper was too expensive for the third world. When cellular came on into vogue, the third world really leaped forward the developed world in being connected.
Welcome back to Taking Stock, everyone. We're live down here on the floor of the New York Stock Exchange. The market closed for trade this week. Another winning week for the S&P 500. Let's take a look at a few fintech, crypto, and AI headlines. Bitcoin today pulling back after testing highs above $116,000 a token. Now trading just under $115,000. Ethereum, meanwhile, holding strong near $4,500, up about 2% on the session. Next up, OpenAI striking an agreement with Microsoft to transition its for-profit arm into a public benefit corporation. The move could pave the way for future fundraising and a potential public listing. Finally here, BlackRock looking to tokenize some of its funds tied to real-world assets and bring them on-chain. The world's biggest asset manager is expanding its digital push after Bitcoin and Ethereum ETFs topped $10 billion each. All right, joining me now right here at the FinTech studio is Philip Zentner. He's the founder and CEO of LeFi Protocol. Philip, welcome to the show.
Thank you for having me. Hi.
It's so great to have you. What should our viewers know about LeFi?
LeFi is an infrastructure provider that enables companies of all kinds, anyone is related with crypto, to discover assets and prices. And we are helping companies like Google Maps to find the best routes from one asset to any other asset.
Mm-hmm. And how are you working on maintaining cross-chain security?
The way we go for that is essentially that we are aggregating all kinds of solutions when it comes to exchanges, when it comes to bridges, and we have a security team that assesses all these different solutions because it's a very fragmented space and it's important that someone has risk assessment frameworks in place. We have developed these frameworks with big companies like Consensus, and now we essentially make it possible to find the best and safest route.
Yeah. What is the demand that you're seeing among retail users?
Retail users nowadays are really into Hyperliquid. This is certainly the one ecosystem that pops up the most, but there are also long anticipated ecosystem launches like Monad right around the corner over the next 2-3 months, and that's what's waiting for them.
Yeah. I'm just curious here in terms of what's next for your company. What can you share?
We are very, very bound to our customers. We have large customers like Robinhood, MetaMask, Binance, and we are in close touch with them, evaluating the RWA space. Real-world assets are coming on chain. Nasdaq just announced the tokenization of securities, so we are very close to that topic. And then stablecoins, we're releasing a specific API around stablecoin aggregation, and that keeps us busy.
Yeah, Circle, a company listed here at the New York Stock Exchange, blockbuster debut debut in early June. Is that a company you're working with?
Not yet.
Not yet, but maybe down the road indeed.
Exactly.
I'm curious here in terms of the exact services that you're providing your customers. You listed some of them. What more can you share?
So what I can share is essentially that this space is extremely fragmented. There are tons of blockchains. We just saw in light of Circle's IPO, Circle is launching their own blockchain, Stripe is launching their own blockchain, Robinhood is launching their own blockchain. So we have fragmentation across the deepest infrastructure levels, and someone has to connect the dots, someone has to understand what are the different pathways possible to move assets, to find the best price. And this is mainly what we're offering. It's a lot of work. We are like a 100-people company by now, and are integrated in the major wallets across the space.
Philip, great to have you here on the floor of the stock exchange.
Thank you.
All right, Philip Zentner, he's the CEO, and he is the CEO of LeFi Protocol. Thanks again to Philip for joining. And stay with us because up next, the latest on startups, raises, and rounds, plus an interview with the CFO of VIA on a blockbuster day for that stock here at the New York Stock Exchange in its trading debut. Welcome back to Taking Stock, everyone. We're down here on the trading floor at the Cheddar setup, and of course, markets closed for trade blockbuster day for names like VIA in its debut. But we want to talk now about startups, raises, and rounds. First up, OpenAI's PBC realignment, giving its nonprofit arm an equity stake worth more than $100 billion as the AI firm heads toward a $500 billion valuation. Up next is Databricks. Its head of AI, Naveen Rao, stepping down to launch a new computer startup aimed at cutting the cost of AI computing power, with Databricks planning to invest in this new venture. Finally, San Francisco startup Medra raising $11 million to build robotic lab systems that can run and optimize lab protocols with minimal human involvement. Pretty impressive. All right, everyone. Well, up next, we do want to send it to some incredible footage that was captured down here on the floor of the New York Stock Exchange earlier. In fact, a key member of VIA spoke with our Ashley Masternardi more about this major debut. Let's take a look at that story.
Welcome back to NYSE Live. We are in the middle of Via's IPO celebration. So if you've lived in a major city in the past 10 years, like New York City, you might remember Via's rideshare service. The company has since pivoted to providing technology to transform public transportation systems, but it turns out that was their plan all along. Joining me now to share more is Via's CFO. Take me through Via's brand journey.
Thank you, Ashley. We're so excited to be here today. It's been an incredible experience at the NYSC. Via was founded to bring technology to public transportation, and today we're in over 600 cities in 30 countries, bringing our technology to help 8 billion people travel more efficiently through public transportation. We're very proud to be here, and thank you for having us.
What has Via's financial and operational track record been throughout the years, Clara?
So at Via, we have a track record of rapid and durable growth. The business has been growing over 30%, revenue growth historically. We sell to cities, transit agencies, governments, and those customers rely on us for their mission-critical infrastructure. Business is extremely sticky, and we're just 1% penetrated of a very large $500 billion market.
Why did Via decide to go public?
You know, we manage very important and critical services for our customers, which are governments and cities, and we take that very seriously. In a world where there are a lot of questions, we are proud to go public and bring the scrutiny of the public markets to our business and to our customers.
How will your additional IPO, how will the capital from the IPO be allocated?
We will continue to invest in innovation and technology, continue to grow, and we have done acquisitions in the past, which we expect to continue to do in a very selective manner. And of course, public transportation is one of the last pen and paper industries, and with the proceeds, we hope to continue to bring cutting-edge technology to the space.
And Via has more than 1,000 employees. What is your message to them today, Clara, on IPO day?
Reflecting on today, we are so proud and grateful for the team and their incredible work to get to this point. When you take a step back, Via is one of the only tech companies bringing technology and cutting-edge, innovation to a space that really needs it, and to 8 billion people. And it's amazing to see an incredible group of investors come behind a company like Via that does tech for good. And I'm just so proud of our team today. It's a mission-driven team of what we're achieving and accomplished together. It's really a true team effort.
Clara Fain, CFO of Via, thank you so much. Sorry about that earlier. Thank you so much for joining us. We really appreciate it, and congratulations.
Welcome back. I'm Scarlett Sieber, and this is Hindsight 2020. We're going to rewind way back in the time machine, back to one of our favorite years, or not in this case, 2008, September 22nd. Leading up to this fateful day almost 17 years ago, Wall Street was in full meltdown mode. Lehman Brothers was gone. Merrill Lynch had just got a shotgun marriage to the Bank of America, and we all know what happens with shotgun marriages. AIG was on a taxpayer life support, and then on September 22nd, two of the last investment banking titans standing, Goldman Sachs and Morgan Stanley, looked around and realized, oh boy, something has to change. They cannot continue as a pure play investment bank. They were the last of their kind. Deal makers first, risk managers second, operating with leverage ratios that made traditional bankers blush. For over a century, they thrived on high-wire deals, trading, and risk-taking. They were the last tycoons, the sharp suits, the big bets, the bigger bonuses. We saw that money. I'm missing my cash here. That would have been a good one for that. But when the financial crisis hit, the world changed in the blink of an eye, and continuing to function under the structure of a pure investment bank was, ironically, too risky. So why flip the switch? Survival. By becoming bank holding companies, Goldman and Morgan have something that investment banks did not have: direct access to the Federal Reserve's emergency cash window. They weren't sneaking to the Fed's cash vault. They were finally allowed in through the front door like every other bank with their very own membership badge. We like the membership badges in here. It was like getting a library card to the Federal Reserve. Suddenly they have access to shelves of liquidity that regular banks had been checking out for decades. But what they weren't just gaining was access to liquidity. They were also willingly walking into regulation they'd spent decades avoiding. In September 2008, tighter regulation looked pretty appealing when the alternative was driving straight off of a cliff. The conversion to a bank holding company was about legitimacy, stability, and yes, survival. But they were giving up some freedom, sure, but this also meant potential for a new set of business opportunities in traditional banking. Seems like it worked out okay for both organizations. In September 2008, Goldman traded as low as $96.12. Fast forward to September in 2025, the stock has climbed to a 52-week high of $757.35. It's not all about Goldman, though. Morgan Stanley also dropped to $15.84 a share back in September 2008. And now Morgan is trading near its 52-week high of $151.86. We love a happy ending here. That's great. September 22nd, 2008, the day that the bank and the independent investment bank, the Wall Street archetype that built modern finance, died. Your hindsight is now 2020. Back over to you.
Welcome back to Taking Stock, everyone. We're just about to round out the show and the week of coverage. The S&P 500 booking another winning week. In fact, its best week since early August and up for 5 out of the past 6 weeks. Via a blockbuster debut today, those shares holding steady and rising, in fact, on their first day of trade at the stock exchange. This transit tech firm priced its IPO at $46 a share last night, raising $493 million. With a market value of $4.2 billion. We'll saw a boost from that. This company made the City Mapper mobile navigation app, and it does sell software and operational services to local transit agencies and cities around the world. A reminder, you can watch our show each weekday at the market close. We're live on the NYSE handle, FinTech Money 2020, and Cheddar platforms, as well as StockTwits. Thank you for watching as always. We hope you have a wonderful weekend. We'll see you back here on Monday.